Alright, let's talk Bitcoin. As we close out December 2025, Bitcoin is at a crossroads, caught between bullish optimism and bearish caution. The price is consolidating after a wild year, and what happens next could set the tone for 2026. On one side, you have believers treating Bitcoin as digital gold. On the other, traders wary after recent volatility. The October-November sell-off forced the market to find its footing, and now, only the committed remain. Is this the base for a new all-time high, or a pause before another drop? Year-end is always tricky. Trading volumes are thin, big funds are on break, and prices can swing on small news. This standoff matters. Retail and institutions are both watching, ready to set their 2026 strategies. The excitement around Bitcoin is still alive, but the market is digesting gains and rebalancing. This isn't panic time, it's time to pay attention. Understanding key price levels and the broader economic backdrop is crucial. Don't get scared, get prepared. The market is at a pivotal moment. Let's break down what you need to watch. Here's where things stand as we head into the new year. Year-end trading is like a city on a holiday. Quiet, with low Bitcoin volumes. Fewer buyers and sellers mean even small trades can move the price sharply. Big money managers are locking in gains, not chasing last-minute rallies. Many are selling riskier assets like Bitcoin to rebalance or for tax reasons. Some are harvesting losses to offset gains elsewhere. Others are trimming positions to keep portfolios in check. This is standard financial housekeeping, not a verdict on Bitcoin's future. Low volume, reduced risk, appetite, and rebalancing explain the current price action. Recent ETF outflows, we'll get to that, but it's part of the seasonal pattern. This behavior is expected and temporary. It doesn't signal a fundamental shift in Bitcoin's long-term outlook. The market is taking a breather, not panicking. January will bring new energy and likely new moves. The quiet now could be the calm before the next storm. In this market, the battle lines are clear. $85,000 is support, $91,000 is resistance. $85,000 has been tested twice. Buyers stepped in both times, showing strong demand. As long as Bitcoin stays above $85,000, bulls can breathe easier. A break below, that's a red flag. Expect a sharper drop as stop losses trigger. This level separates a healthy pullback from a deeper correction. On the upside, $91,000 is the first major hurdle. Sellers are taking profits there, capping rallies. Bulls need a decisive move above $91,000 to regain control. The next big resistance is $94,700, a true breakout above that signals a new uptrend. These levels define the current trading range. Watch them closely, they'll show where momentum is shifting. The market's next move hinges on which line breaks first. This is the technical map for early 2026. Stay alert to these goalposts. If Bitcoin breaks above $91,000, things could heat up fast. Breaking resistance is like opening floodgates. Sideline buyers jump in, and short sellers scramble to cover. This short squeeze can drive explosive moves. The next stop, $94,700, clear that, and $100,000 comes into view. Technical targets beyond $100,000 are already on analysts' radars. A true breakout would flip market sentiment from caution to optimism. News headlines would hype new highs, drawing in more retail and institutional money. ETF outflows could reverse as fresh capital chases the rally. A strong start to 2026 would reinforce the long-term bull case. But remember, the price is still below key moving averages, so resistance remains. Momentum indicators are improving, hinting at a possible upward move. A breakout above $91,000 is the signal to watch. Spot Bitcoin ETFs have been a huge story this year, but recent outflows are spooking some investors. Context matters. These outflows are typical year-end moves, profit-taking and portfolio rebalancing, not a loss of faith. Throughout 2025, ETFs saw massive inflows, showing institutions are building long-term positions. The small outflows now are minor compared to the year's tidal wave of capital. ETFs have made Bitcoin accessible to big money, pension funds, endowments, asset managers. This is a structural shift, not a fleeting trend. Don't panic over seasonal headlines. The real test comes in January, when fresh capital returns. If the trend of inflows resumes, it's a powerful tailwind for Bitcoin. The ETF story is about long-term adoption, not short-term jitters. Watch what happens as the new year begins. The fundamentals remain strong. 3 forces will drive Bitcoin in 2026: global liquidity, regulation, and institutional adoption. First, global liquidity. When the Fed cuts rates, risk assets like Bitcoin benefit. All eyes are on the Fed's path for 2026. Easier money could be rocket fuel for crypto. Second, regulatory clarity. Clear rules make big institutions comfortable entering the market. Expect new standards for ETFs, exchanges, and stablecoins. Regulation isn't a threat, it's an invitation for big money. Third, deeper institutional ETF adoption. 2025 was just phase 1. Now, pension funds and insurance giants may allocate even a small percentage to Bitcoin, unleashing huge capital flows. These 3 engines, liquidity, regulation, and institutional adoption, are interconnected. Easier money encourages risk-taking, clear rules enable it, ETFs make it simple. This trifecta could drive the next major bull cycle. Short-term moves are unpredictable, but these long-term drivers look strong. The stage is set for a powerful 2026. Watch these forces. They're the real story. In crypto, whales are the big players who can move markets with a single transaction. When a whale moves coins to an exchange, it can spark fear and trigger sell-offs, even if no sale happens. Sometimes, these moves are for loans, hedging, or internal management, not just selling. But perception matters. Large transfers during low-volume periods can create volatility. Analysts track these moves as early warning signs. A big inflow to exchanges could break $85,000 support, even without a fundamental shift. No big inflows? The market may grind higher. Whales play a strategic game. Understanding their moves is key. Especially in quiet markets, whale activity can tip the balance. Stay alert to these signals. Bitcoin's fate is tied to the global economy. Inflation and central bank policy are the main drivers. If inflation cools and the Fed cuts rates, Bitcoin thrives. Lower rates mean investors seek higher returns in assets like crypto. This soft landing is the ideal backdrop for a bull run. But if inflation rises and the Fed tightens, Bitcoin faces headwinds as capital flees to cash and bonds. Geopolitical shocks or economic crises can also shake markets. Sometimes Bitcoin acts as a safe haven, but often the dollar wins. The key: Bitcoin does best in a stable, growing economy with easy money. Turmoil and tight policy are its enemies. Macro trends matter as much as technicals. Watch the economic currents. They steer the ship. Bitcoin doesn't sail alone. So, what does this mean for you as 2026 approaches? The year-end lull hides a battle between bullish fundamentals and short-term pressures. Don't get shaken out by noise. Focus on the big drivers: institutional adoption, regulatory clarity, and Fed policy. Watch $85,000 support and $91,000, $94,700 resistance. These are your signals. Let price action confirm direction before making big moves. Patience is key. Bitcoin is evolving from a speculative asset to an institutional staple. There will be bumps, corrections, and doubts, but the structural shift is real. ETFs are the bridge for big money, and it's only getting busier. Don't let volatility scare you from a long-term revolution. Stay informed, respect the technicals, and keep your eyes on the macro picture. The potential is huge, but so is the risk. The game is just getting started.